Hey, hello traders, this is Bruce for Spartan Capital Markets. I'm going to quickly go through the new newsletter for March 5th, Sunday. This is the weekly market report. And we are going to cover the Aussie dollar, Bitcoin, dollar yen, dollar CAD, euro dollar, and German DAX. As I said, I'm going to go through this relatively quickly. For further details, you can look at the write-up. But this is kind of just to give you a heads up of some of the key components. So here we have in the Aussie dollar, a couple of things happening. Here we try to go lower, try to go lower, try to go lower, try to go lower 4 out of 5 days last week. And then by the end of the week, the market managed to close at a 6-day high. So, and on a support zone that includes this downtrend line, this uptrend line, then this 100% projection of this first leg down. In other words, the second leg down, if it matches this first leg down, will occur right here. So this second move down is 100% at this point of the first move down. So we have some symmetry within the market swing. So a bounce is anticipated at this point, at least up to the 38%, or some of these moving averages up here. Of course, if we break lower, that everything changes. In that case, we have some support zones right here. But initially, I would anticipate probability is probably better we break upwards. Second, we have Bitcoin. Bitcoin had a very strong rally off this low over here, off this low over here, broke through the 200 period exponential moving average, very bullish, came down and tested, and then broke out again to new high. That's bullish, coming down again to test it, along with this uptrend line. And if it holds and goes higher, that would be bullish, and that would be the expected scenario. However, we could easily come through below the 200 again and maybe retrace a bit more down to some of these other Fibonacci levels. This swing low right here is also a weekly low. So, a monthly low. So the break of this low could end up definitely leading to a 62% retracement, or at least a 50% retracement. We're also keeping an eye on the intersection of these lines, because this is potential support, this is potential support, and so forth. So I wouldn't be surprised to see it come down here to 50% of the 62 before we go higher. But so far, we can anticipate that it will go higher before breaking the 200, unless we see evidence contrary to that. Next, we have the dollar yen. And a situation of the dollar yen, we found resistance, which I talked about last week, at this Fibonacci confluence. And this week, again, it hit it, could not break through. Reversed, of course. This is all due to the dollar behavior. So two scenarios: either we break out and go to the next level, or we come down and hit support first, which I would expect to be the more likely scenario, down here to 134.77 or so, and then down here 133.75.80, which is where the 200 period exponential moving average is. Also notice that the 21 shorter term moving average crosses up through the 200, confirming strength. So this strength that we see here, as price moves away from the moving average, is likely to continue again. However, we may move into consolidation or a bit of retracement before that happens. I think that would be healthy for the market. Then we have the dollar CAD. So we've been on an uptrend right here on the dollar CAD after testing support of the 200 blue line moving average once, twice, broke out of that double bottom, continued, broke the downtrend line. But it may need a little rest. And so we can see that by the fact that this line here is hit once, two, three. We broke the line, went a little lower, and then came up and tested the line almost exactly. So support was resistance. That means good chance we're coming a little deeper before we go higher. There's no reason to think we wouldn't go higher at some point once the retracement is complete, given the overall pattern here. Then we have Hathaway analysis, where we do some geometric analysis. Scott Hathaway does some geometric analysis, starting with the euro dollar The write-up, of course, talks about more details about what's going on here. We don't get into all the layers of analysis and all the intricacies of it because it's just too sophisticated and complex, and most people would not understand it, and it just requires a lot more background. But what we have here, or what we're seeing here, is we're seeing the euro consolidating around this mean. And this mean has two parallel lines drawn around it. So first of all, there's a grid created, okay? And this grid is created, and you see 1, 2, 3, 4, 1, 2, 3, 4. That creates the grid. Within the grid, a parallel line goes at this 2 and at this other 2 down here from this mean. This means we can go either direction at this point. We believe it's probably more likely to the downside, but we have to see where the evidence lies. In other words, where does price move? Do we pop higher or go lower? Be prepared for each. If we go lower, then the target, even though this is an interim target here and not labeled because we don't know when it might be hit, so we don't know the price, but there is an expectation that by March 20th that this 0.150 area would be hit if we go lower. That's on the euro dollar. And then we have finally the German DAX index. The German DAX index, the analysis starts by looking at the swing relationship back here and drawing the dual vector concentric circle tool and bringing that forward into the future. And then adding some other lines to it, where we get these, the 1/10th line, the 720, the 1/10th, the 1/5 right here, which is where we are right now. And that 1/5 line is potentially very significant resistance that could turn the market lower. As with any key pivots, it doesn't mean that we are going down. It just means that if we are going down, this would be a good area that we would go down from. If we go higher, of course, then above the 15,670, then we're going to keep continuing on this nice momentum, upward momentum trend. If not, we go to lower prices, which are also discussed in the write-up. So that's it for now. Of course, if you have any questions or comments, please send them to Spartan Capital Markets. And keep in mind that there is an important disclaimer and risk warning at the back here. If you're going to trade Forex, you want to be capable of doing it in the appropriate way relative to what you can afford to risk. So that's it for now. Have a great trading week.